Once again, good morning everyone. I welcome you all to the 95th webinar of Zen Tax Clinic. First of all, I would like to extend my heartfelt thanks to all of you for your consistent support in all the webinars conducted by Zen Tax Clinic. It's your comments, it's your emails, it's your valuable feedbacks that motivates us to keep on doing the Zen Tax talks week after week. So the topic suggestions also comes from your side. We value each and every inputs that is provided by you. GST also being a very dynamic law in the current environment. We can see n number of notifications that comes during the during the course of the year, not only at the time of Finance Act, which used to be in the earlier tax regimes. So for that matter, all the inputs which are provided by you and all those thought-provoking questions that is being asked from your side. So those things also motivates us to dig deep into the law, read finer between the rules, sections, and also the procedures, and get back to you with good insights, which will be helpful for you and also for us. So today's topic, you would have already read our topics, the side heading of our topic. It is related to the new changes that has been brought into the GST law in terms of facilitating ease of doing business. So GST, as you all know, since its inception for past 7 to 8 years, the government has been branding it as a measure towards ease of doing business, facilitating ease of doing business. So in reality, whether it is implemented to its fullest literal sense is a question mark, is what I would say on a personal note. But definitely over the years, there has been several measures which has been implemented by the government in consonance with the feedbacks received from the trade and industry to facilitate the GST filing process, to facilitate the GST litigation process, and also we are awaiting the GST tribunals, and the filing of appeals has also started. So you can say that more or less things around GST is getting settled. And now that we have been facing certain issues related to GST registrations since some time. So in the state of Tamil Nadu, you could see that the government has been taking several measures to curb bill trading practices and the other malpractices which are related to GST, where some person would be obtaining a GST registration, they will not be having a proper place of business itself to conduct their business. So they introduced a welcome letter concept. So if you remember, most of the people who took registration in some time back, they would be receiving a welcome letter from the GST department. And if that welcome letter is not received by the registered person or the taxpayer, and if it is sent back without acknowledgement, then in those situations, the government thinks that you do not have a place of business, and the place of business on which you have obtained the registration is bogus. So these kind of things the government were doing from their end to curb such practices, which resulted in bill trading and all those kinds of transactions. So you can see that even after that, the 56th council meeting, which was touted as the most significant reform since inception of GST by our Honorable Finance Minister Nirmala Sitharaman, and as it was rightly marketed, so there were huge rate rationalization that happened in GST, where the slab rates were also hugely impacted, where the 12% slab rate is done away with, and there was a 28% plus a 12% cess, compensation cess, which resulted to 40%. So the 40% taxed items has been drastically reduced, and there are also significant changes from 28% slab to 18% slab. So this took place in the month of September, to be precise, 22nd of September. 2025. So even along with those changes, there were other structural changes or policy reforms which has been taken decisions in the council meeting, such as GST registration, faster GST registration. See, those of you who have been involved in obtaining GST registration from the department, be it any state or union territory, you would be knowing that it takes roughly around 20 to 25 working days to get a GST registration. And there are multiple questions which are asked by the department, and a show cause notice is also sent by the officer in this regard, which you have to file a reply along with the other attachments which you have to give. So from our experience, we have been facing some delays in obtaining registration, be it in the state of Tamil Nadu, Kerala, Karnataka, or Andhra Pradesh for that matter. So things happen in a similar way all over these 5 southern states. What happens once you file an application for registration? The system do some verification, and it is then assigned to the proper officer for his personal review and perusal. So at this point of time, the proper officer asks you details about obtaining NOC, whether there is any discrepancy between the address that is stated in your principal place of business and the proof of document that you have given. And there are also multiple issues which involved in that matter. So what is the trade facilitation measure that is introduced through Rule 14A, which was which came into existence through notification 18/2025 in central tax. So what has happened now? If you want to take GST registration post implementation of these measures from 1st of November 2025, it takes only 3 working days, is which is told by the GST officers, and which is also promised. See, we can also from practical experience say that we saw many cases where the GST registration was granted in 3 days, in fact. So we can say that this is a trade facilitation measure which has largely impacted the way you take GST registration. So there are many conditions which you have to follow, which you have to satisfy to go through this route. That Rule 14A, this route, if you have to take this route, there are several conditions which you have to satisfy. Those conditions, and what are those conditions, and other aspects related to applying, then withdrawing, then again coming under the regular GST registration, all these things, all these changes would be in detail discussed by CA Kritika, who has joined our team recently. So she has prepared a detailed presentation related to all the notification and all the changes. She would make a detailed walkthrough related to the practical changes. So this is the main changes related to GST registration. On the other hand, we have some significant changes which is coming in related to GST refunds also. See, as you all know, after the rate rationalization which took place in the previous month, inverted duty structure which was existent in the spinning mill textile industry, it is largely done away with. See, if we look at the structure of the inverted duty structure, especially to talk about in these industries, see, before it was within the pump industry. So like that, currently, if you can see that only few industries going forward, only few industries would be impacted by inverted duty structure, wherein the rate of tax on your inputs would be higher than the rate of tax on outputs. And for this reason, ITC will be accumulated and you will have to get it as a refund. Export with payment of tax or without payment of tax, there is largely no changes in that segment. But whereas under inverted duty structure, we were finding it really difficult to get the refund in a timely manner. See, as a business person, the working capital is very important, and it is getting accumulated. ITC, when it is getting accumulated and it is in our credit ledger, it is really difficult to run the day-to-day operations of business. So to ease, the council has recommended a mechanism to give provisional refund on inverted duty refund applications also, from 1st of October 2025. So it is only a trade facilitation mechanism. As of now, the section 54, the amendment has not been brought in. So we expect the amendment to be brought in during the Finance Act, which is coming up in the February 2026. So for that reason, there is also some changes in refund filing and the application and all those procedural aspects. This has been brought through wide instruction 6/2025. So these aspects will also be discussed in detail by Kritika. So you can also ask your doubts, which all doubts you have in our chat box. We are more than happy to take your doubts and give clarification. So now I will hand over this session to Kritika, who will guide you through these topics. Once again, thank you so much for your support. Over to you, Kritika.
A very good morning to everyone present here. We are very happy to have you all here to discuss the new changes in GST registration, the provisional refund. Let us, before jumping into the topic, we can have a quick recap of how the GST registration process has been in reality before this simplified registration. There has been a lot of paperwork and huge time taken for getting the GST registration. So the government has introduced the new simplified registration to evade the time gap and documentation works involved in it. For the new simplified GST registration has been brought into effect from 1st of November 2025, which has been introduced sorry for the inconvenience. The new simplified GST registration has been brought into effect through the introduction of Rule 9A, which has been come into effect from 1st November 2025. This rule has been inserted to an applicant who applies for registration on or after 1st November 2025 will be granted electronic registration within 3 working days from the date of submission of the application based on the data analysis and risk parameters given by the system. The next rule, 14A, which has been introduced for getting GST registration for small and low risk businesses. This has also been coming to effect from 1st November 2025. This has been introduced to simplify the registration process and to promote speed and transparency on part of the department, and also to eliminate the long waiting period. And this helps the small and low risk applicants to get their GST registration within a shorter period of time. Let's look into the eligibility on who can apply for registration under Rule 14A. Any applicant who supplies goods or services or both to another registered person on his self-assessment determines that his total output tax liability, inclusive of CGST, SGST, and IGST, including cess, which does not exceed 2.5 lakhs per month, that is 2,50,000 per month, he can apply for registration under Rule 14A. For example, if an applicant estimates that his monthly turnover is around 10 lakhs, then his total output tax liability, which on which goods, the supply of the goods is charged at the rate of 18%, and his total output tax liability is 18%. Total output tax liability will be 1.8 lakhs, which is less than the threshold limit prescribed under Rule 14A. Hence, such applicant will be eligible for registration under Rule 14A. And there are other certain requirements for getting registration under this rule. One of the primary requirement is Aadhaar authentication. If an applicant has to get registered in Rule 14A, Aadhaar authentication is very mandatory. And if in case of the proprietorship, in case of the partnership or company, Aadhaar authentication is mandatory for the primary signatory and authenticated before on applying for registration. And upon successful Aadhaar authentication, the registration shall be granted electronically within 3 working days from the date of submission of the application. And the rule also prescribed another requirement that only one registration shall be permitted in a state or union territory under a same PAN. That is, only one rule registration is permissible in a state or union territory under a single PAN. This reduces the multiple low-risk registrations in the same state or union territory. And the next is how can an applicant get registered under this Rule 14A? This is a simple process. Like it is similar. An applicant can apply for registration in Form GST RG01, and after getting the temporary registration number, while filling the basic details, an option has been enabled by the department, like option for registration under Rule 14A. If an applicant is eligible to apply under Rule 14A, he can enable yes on this option, which is available which is presented for you in the screen, and proceed with the registration application. Subsequent to this, he will be getting registration certificate under Rule 14A. After getting registration under Rule 14A, an applicant can furnish his output tax liability as similar in case of a regular scheme registrant. There is no changes in the determination of the output tax liabilities or determining the turnover in the returns. And the next is, how can applicant get withdraw from Rule 14A? If an applicant voluntarily wishes to get withdraw from the Rule 14A registration, or if his output tax liability exceeded the threshold limit, he can apply in Form GST REG 32 and get duly signed signed through an electronic verification code, either directly or through the facilitation center notified by the Commissioner. The withdrawal procedures, withdrawal process includes biometric and document verification. After the biometric and document verification by the proper officer, an applicant will be issued an acknowledgement in Form GST REG 02. The verification process under withdrawal option under Rule 14A is similar to the procedure that were in operation for getting registration under the regular scheme. The verification of the document involves other and biometric authentication, photo capture of the applicant, and the original document verification. As I already said, the verification process is same as the procedure for normal registration, which is prescribed under Rule 9 of CGST Rules 2017. Also, what are the time limits? What are the timeline for the verification process of the withdrawal scheme? The document verification may take up to 7 days, and other authentication and the physical verification may take up to 30 days to get withdraw from the Rule 14A registration. After all these verification, an acknowledgement and a form GST REG 02 will be issued to the applicant. After the verification process, a proper officer shall issue an withdrawal order in form GST REG 33 if he is satisfied with the application, or he can issue an rejection order in form GST REG 05 within the time limit prescribed in Rule 9 of CGST Rules 2017. What are the conditions or restrictions applied before applying for GST withdrawal of GST registration under Rule 14A? There are certain conditions pointed by the department for applying for withdrawal application. First condition is if an applicant applies for withdrawal before 1st April 2026, a minimum of 3-month returns to be filed by the applicant. And if a withdrawal application is filed on or after 1st April 2026, minimum of 1 tax period return has to be filed. In short, an applicant has to file all the returns due from the date of registration till the date of withdrawal application for applying for withdrawal. That is, before withdrawal application, an applicant must have filed all the returns due from the date of registration till the date of application for withdrawal, and no proceeding should be pending before the applicant before application of withdrawal under Rule 14A. For example, if the applicant is registered under Rule 14A in the month of November, he can file an application in the month of February 2026 after filing 3 months return, and 3 months return if he files the withdrawal application before 1st April 2026. And the withdrawal from Rule 14A registration is considered as a applicant registered under the regular scheme. There will be no cancellation of registration or no changes in the GST number, and everything will be after withdrawal from the Rule 14A, an applicant will be considered as a regular scheme registrant. If the cancellation proceedings initiated after filing of GST REG 32, that is withdrawal application, the proper officer will reject the application. That is, in the previous slide, I have said that no proceeding should have been initiated and pending before the applicant before filing of withdrawal application. And so, if suppose the cancellation proceedings were initiated after filing of GST REG 32, that is withdrawal application, the proper officer will reject the application, and the process will get stopped. If the proper officer has not taken any action, that will not be considered as a deemed approval, which was prescribed under Rule 9, Subrule 5 of CGST rules, which has been in practice for a regular GST registration. What an applicant can do after withdrawing from Rule 14A. The taxpayer can furnish details of the output tax liabilities exceeding 2.5 lakhs per month from the first day of the succeeding month in which the said order has been issued. That is, if an withdrawal order is issued on 25th of November, that order will be effective from the first day of December 2025. And from 1st December 2025, the taxpayer will be treated as a normal registrant. And the registered person cannot amend the details furnished in the output tax liability so as to exceed the threshold limit for the period prior to the first day of the succeeding month in which the said order has been issued. The same example has been pasted here. That is, if the withdrawal order has been received in 25th of November, withdrawal order is effective from 1st day of December 2025. In this case, the registered person cannot amend or increase his output tax liability in excess of 2,50,000 prior to 1st December 2025. And the disqualifications under Rule 14A. These are the disqualifications. If an applicant has not undergone other authentication, he is not eligible under Rule 14A registration. And holding of Rule 14A registration in the same state or union territory. As already said, an applicant can get registered under Rule 14A in the same state or union territory in a same PAN. For same PAN, he cannot get another registration under the Rule 14A for same PAN in the same state or union territory. And he will be disqualified to apply under Rule 14A if his monthly output tax liability exceeds 2.5 lakhs. And if there are proceedings pending on filing of GST or REG 01, in that case also he will be disqualified under Rule 14A. If the applicant undergone for other authentication, subsequently if the other authentication is failed, he will be disqualified for a registration under Rule 14A. To conclude, Rule 14A is introduced exclusively for taxpayers engaged in small and micro businesses who shall pass on lesser ITZ to the recipient of the supply and with low risk profile. It reduces the waiting period to get the registration certificate and also eliminates the ample time spent in manual scrutiny for small taxpayers, thereby enables the officer to divert their attention for high-risk profiles. So, we advise the new applicants for getting GST registration to duly assess their monthly output tax liability, which is within the threshold limit. Only such applicants is required to get registered under Rule 14A. If and on the other hand, if an applicant assesses that his output tax liability may exceed the threshold limit, he is advised to get registered under the normal scheme. And the other topic, the provisional refund. Before getting into the provisional refund, we will touch upon the refund. What are the inclusions in the refund, which was given in the explanation to Section 54 of CGST Act. Generally, refund includes refund in case of zero-rated supplies, and in case of refund of tax paid in case of zero-rated supply of goods or services, in case of inverted duty structures, in case of unutilized input tax credit as provided in section 54 subsection 3. And also refund of tax on supply of goods regarded as deemed exports. Coming to provisional refund under section 54 subsection 6 of CGST Act. The proper officer may sanction 90% of the claimed refund on a provisional basis for zero-rated supply of goods or services or both made by the registered person, other than such category of persons who shall not allowed for provisional refund as notified by the government on the recommendations of the council, subject to the prescribed conditions and safeguards. This is a trade facilitation measure to increase the working capital of the businessmen to come over the work amount logged in process of refund. Eligibility for provisional refund. In what are the cases provisional refund is issued? Provisional refund is issued for exports without payment of tax and SEZ supplies made without payment of tax. And a new new point has been inserted, that is inverted duty structure. ITCs accumulated in the inverted duty structure is also eligible for a provisional refund, which was inserted by the instruction number 6 of 2025 dated 3rd of October. And the recent notification number 13 dated 17 September happened to effect from 1st of October 2025, which amends the Rule 91 Sub-Rule 2, which tells that verification of refund application for a provisional refund. This new rule, this amended Rule 91 Sub-Rule 2 tells that a proper officer sanctions 90% of the recent refund amount claimed provisionally in case of low-risk applicants based on the system identification and the risk parameters involved. In case of high-risk cases, proper officer may record the reasons in writing and shall not grant provisional refund. Instead, they shall proceed with the detailed examinations of the document and grant for final refund. And there are certain category of persons who has been restricted for a provisional refund. They are any person who has not undergone other authentication, and any person who is engaged in the supply of goods such as areca nuts, pan masala, tobacco, and essential oils. These category of persons will not be granted provisional refund as notified by the government. And processing of provisional refund. Existing process continues till the acknowledgement or deficiency memo issued by the officer, that is till issuance of GST REG 02 or REG 03. In case of low risk cases, 90% of the provisional refund will be granted automatically within 7 days from the issuance of acknowledgement in form GST REG 02. In high-risk cases, detailed scrutiny will be conducted as per Rule 92, and the proper officer will sanction refund order in GST REG 06. Sorry for the interruption. What are the statutory safeguards and exceptions in sanctioning provisional refund? An applicant shall not be granted provisional refund if he has been prosecuted for any offence for any period of 5 years immediately preceding the tax period of refund claim, where the tax evasion exceeds 2.5 lakh. That is, if an applicant, if an applicant has been prosecuted at any time during the period of 5 years immediately before the date of before the tax period for refund claim, where the tax evasion exceeds 2,50,000, he shall not be granted provisional refund. In case of provisional refund, proper officer shall not withhold or make an adjustment in the claim of refund. Also, no provisional refund shall be granted for the following cases. That is, if the previous refund appeal has been pending in an appellant forum, in such case, the applicant shall not be granted provisional refund. And if show cause notice has been issued relating to the refund, or the order has been passed but it has not attained finality, such an applicant shall not be granted a provisional refund. With regard to the inverted duty structure, an instruction has been passed to include the refund in case of inverted duty structure for a provisional refund. GST Council has recommended a similar 90% provisional refund, which is applicable for zero-rated supplies, to also apply for inverted duty structure cases. This amendment will be incorporated in the forthcoming Finance Act. For a trade facilitation measure, an instruction has been issued by the central government to grant 90% of the refund amount on provisional basis, which will be based on the system analysis and the risk parameters. This has come into force from 1st of October 2025. What are the changes in provisional refund that was before 1st of October and after 1st of October 2025? Before 1st of October 2025, provisional refund has been granted for zero-rated supplies made without payment of tax. In case of inverted duty structure, there was no provisional refund applicable. But from on or after 1st October 2025, unutilized ITC in case of accumulated ITC in case of inverted duty structure shall also be granted 90% of provisional refund. When considering the time taken for grant of provisional refund before 1st of October 2025, an acknowledgement after filing of GST RFD 01, an refund application form, and GST RFD 02 will be issued in 15 days time. And after receipt of the GST RFD 02, that is acknowledgement of the refund application, GST sanction or refund sanction order will be passed within 60 days from the date of acknowledgement. That is after 15 days from the date of application, and from that day till the 60th day, refund process will continue, and within 60 days, refund will be sanctioned by the proper officer. So total days included for sanctioning of refund is 75 days. But from 1st October 2025, Acknowledgement in form GST RFD 02 will be issued in 15 days time. That was same as before. But refund order, provisional refund order in GST RFD 04 will be issued within 7 days from the issuance of acknowledgement in GST RFD 02. That is the total period included. Total period taken for issuance of 90% provisional refund is 22 days. What are the benefits for a businessman in this 90% provisional refund is a greater extent of the interest cost will be reduced, and the an increase in the working capital flow for the ease of doing business. So, we thank you for all the attendees to to present here and share the get involved in the discussion of the changes in the GST registration and provisional refund. If any queries on your part, kindly put it in the comment section or Q&A section. We will look into it and clarify your doubts on the same. Thank you.
So there are a lot of questions in the chat box. We'll try to answer it one by one. So regarding Rule 14A, whether the assessee have to report if the tax liability crosses, say, after 3 months. See, as far as what we could see from the portal, to facilitate this mechanism, see, this has been implemented only a while back. So since it has started only from 1st of November 2025, we are yet to check if there is any enabling mechanism in the portal to track whether the B2B tax liability crosses the threshold of 2.5 lakhs per month. And then a pop-up is given, a notification is given, some kind of an alert mechanism is given. As of now, we are not able to find it in the portal. So it is the onus or responsibility of the taxpayer to keep a watch on the transactions cumulatively on the month, during month on month. And if the liability is exceeding 2.5 lakhs, then the withdrawal option has to be exercised. It is the onus and responsibility of the taxpayer. So what happens if the liability crosses 2.5 lakhs mark? Whether the assessee have to re-register himself, or is there any other procedure? See, if you go through the procedure, they have mentioned that there is no requirement to re-register assets. If the B2B tax liability exceeds the threshold of 2.5 lakhs, you can apply for a withdrawal of the application, and upon the verification by the officer, subject to Rule 9, the officer will issue a registration certificate REG 33 in that form, either rejecting or approving the application. So the transition will be smooth. There is no change in GST registration number as such. The same number continues to exist even post the change mechanism. Is there any amendment possible, like change in PIN code? See, those kind of details as of now we do not have clarity, but from whatever we understood about the after reading the rules, the changed rules, there will not be any restrictions related to modifying these kind of changes through a core field or non-core field amendment. In 14A, which option, yes or no? See, if you satisfy the condition, See, the conditions has already been explained by Kritika. We'll also be sharing the PowerPoint presentation to you. So you just go through if the conditions are satisfied by you or not. If you want the registration within 3 working days, and if you also satisfy all the conditions, the most important condition being restriction or cap on tax liability on B2B supplies being 2.5 lakhs per month. So if you satisfy all the conditions, you have to click yes under 14A option and proceed to file the registration application. After receiving GST registration, shall we change the option to change quarterly? See, those things are largely, we are expecting clarity on these return filing aspects, but we can say that those kind of things, monthly filing or quarterly filing, I think only monthly filing would largely be applicable to this kind of a registration, since you have to also track liability. If there is any change or the liability exceeds more than 2.5 lakhs per month, then you will have to file the withdrawal application. So for that reason, I think monthly filing of GST returns would only be applicable for registrations obtained under 14A. Is there any provision for auto upgradation? So there is no provision for auto upgradation. The officer has to check and satisfy for himself that you have complied with all the rules and procedures, and then only registration would be transitioned to normal registration upon submitting the withdrawal application. The condition is that up to output tax liability restaurant exceeds 2.5 lakhs per month. Does this include all supplies? See, it is clear that the restriction on output tax liability is on B2B supplies only. And if you are engaged in B2C supplies, it means that your customer is not claiming ITC on these transactions. For that matter, so you need to take only B2B supplies, and B2C supplies there is no cap. Selva Kumar sir has asked to share the PPT. Definitely, sir, we'll share the PPT. Multiple registration is not possible under 14A. If there is a separate business vertical, then normal registration has to be obtained, and multiple registration is also not possible. It means that the liability will be exceeding, right? If you take multiple registrations, then in one registration, the B2B liability, you are keeping it below 2.5 lakh, another registration, then 2.5 lakh, it will create more issue for the government. So for that matter, definitely, as of now, it is not applicable. So since the changes has been come into force only since a few days, we are awaiting lot of changes to be implemented in the GST portal side, and those practical insights will definitely come back to you with the same topic in maybe another 3 to 4 months time with more practical insights, so that we can share even better directions, or we can guide you in a better way to, based on the implementation. Shall we get any certification for attendance? Karthikeyan sir. Sir, it's happy to know that, see, you want a certificate to ensure that you have participated in a webinar and gained some knowledge about GST. So we would definitely take this up, your suggestion. As of now, we have not been issuing any certificate, but definitely we have been monitoring the people who attend the webinar from time to time, and those who have been staying with us since a long time, almost around 2 years of time. So definitely I take up your query in its utmost sense, and I will get back to you with an answer in our next webinar, sir. So for sure, this question has been taken up, and I will definitely get back to you in our next webinar with some kind of a enabling mechanism, sir. Why not B2C transaction? Sir, B2C transaction, as I already explained to you, the input tax credit is not passed on. See, from government's perspective, just think it this way. They are worried about if someone is taking a registration and they are passing on input tax credit, then it will be a loss for the government without underlying actual supply. So for that reason, they have to curtail those practices. So that is why there is a cap. But for B2C transactions, you will be paying tax and no one will be taking input tax credit on that. So they only need to ensure whether the liability reported by you is paid by you. So for that reason, B2C transactions, there is no checking mechanism as of now, sir. Sir, yes, sir, if you just look at the timeline in your X feeds, the Twitter, which was called earlier. So if you look at the feeds, there are many people who are practitioners, who are chartered accountants, posting their successful attempt in obtaining GST registration under the new rule. So since it has been 6 to 7 days, I think many have obtained registration. And if there are any issues also, we'll definitely bring it to you. And if you are facing any issues, kindly reach out to us. You can mail us, and also you can reach out to us in our contact number with your difficulties. We are more than happy to support you in your journey in obtaining registration in a fast manner. So this is surprising. So applied registration twice and you have obtained the registration also 2 times. So definitely proceed to cancel one registration, sir, on the premise that you have obtained GST registration multiple times. So it is your responsibility. Please apply for cancellation of one registration. And it might be a technical glitch also, since the system is implemented in the last few days. So there might be a possibility that this might have gone unnoticed. So the registration is also given by the system in an automated manner. So there are chances for this to happen. So kindly get one registration cancelled, sir. Same day. It's great to listen to your experience, sir. So you are saying that it is not even taking 3 days. So it is a very testament, a very true testament to the change in rules, and so it is working effectively is what we are able to understand from the comments that we get from our attendees in webinar, sir. Voice is so okay. Voice is breaking. Okay, now I suppose the voice is okay now. So if there is any disturbances, we will be taking it up in the next webinar. So we also get live feedback from few of our team members who have been engaged to for this aspect alone. So we'll monitor that. Yeah. Thank you for the feedback. Okay. Fine, sir. So thank you, everyone. We'll meet in next webinar. So once again, thank you. We have been able to answer most of the questions that is posted in the chat box. If there are any more queries, kindly reach out to us in email or through our dedicated WhatsApp number. So thank you so much. Once again, thank you. Kritika? Yeah, this you send.
Thank you everyone for attending this session, and your valuable comments and questions posted by you has been answered. And if further any queries as you have any further queries, kindly mail us at solutions@zenttax.com. We will get back to you and give a clear clarification on the suggestions.